So today we will discuss about identification of good stocks. So basically, there is always a question that you have been talking about identifying growth stock, risk stocks, stable stocks. But how do you generally identify stocks that can be considered to be good, right? And in what sense, of let's say the factors, uh, both qualitative and quantitative factors, do you consider these stocks to be worth investing, right? So we'll discuss today about the qualitative factors, uh, helping us to identify, or maybe let's say shortlist some stocks that we can consider to purchase. So, starting off with the qualitative factors, you when you pick up a stock, you basically need to understand that you are investing in a business, and do you understand the business and its operations? If you don't understand the business and its operations, then I would suggest that please don't invest in such a business. In turn, meaning don't invest in such a stock. Uh, when it also comes to the qualitative factors related to brand, there are two things that you should actually look at. One is the presence of brand. Now you can argue that some of the well-established companies do have a lot of brand presence. So those companies are definitely good from shortlisting perspective, and also are you able to recall the brand? So if I tell you about a company or its business, is it synonymous with a brand that is recalled, very well, maybe across different cities or maybe across different, countries as well, right? So that's an important pass. I think the other part, the third factor that you should definitely consider is how has the business been selling the product? Have they been selling the same product with the conviction in the past, and do they plan to continue the same product, uh, you know, in the future, right? So yes, you can argue that there would be variations in product line, but an example could be something like a company that manufactures soaps, could get into maybe let's say building liquid hand washes, and can also get into maybe providing detergents and all. But a soap brand, uh, all of a sudden decides to get into food manufacturing, or let's say manufacturing candies, or anything of that nature, right? Should basically be considered as uh, not selling similar or same products. Exception to it could be large, obviously FMCG companies, but I'm talking more of identifying businesses in their early stages. Also need to look at how much is the repeat business, and I by that I mean also looking at the repeat customers. So if you bought a product, would you be able to retain those customers selling the same product again, right? If you are, and if you have been able to do that in the past, then consider it to be a good qualitative factor. And the last part is around pricing. How much control does the business have over pricing? This is primarily to beat the inflation. So if you are a good business, the inflation cost, let's say, which might run typically 2 to 3% over a year, are you able to pass those costs, to your consumers? In other words, like if the inflation is priced in into the product, do the consumers still go ahead and buy the product? If the answer is yes, then it's a very good product. So these 4 or 5 factors can definitely help you with identifying some good companies.